Good afternoon. Welcome to the 2023 Upper Manhattan Real Estate Report by Harlem Lofts. Today our real estate report will be released next week. If you want to go to our website to the resources tab, you can get a copy digitally. If you want these slides, because we're going to go through them relatively fast, you can download them on the link below if you're on YouTube. And then if you have any questions and comments, please put them in YouTube below so that we can answer them. Okay, we're dividing this in, this is our yearly, so it's a little longer, we're going to divide it into 3 segments based on your interest. The townhouse market, the condominium market, and then our outlook on the market. Right. 3 segments. This is Gareth John. I'm Robb Pair, best stars behind the scenes. Hopefully you know us by now. We'll start with the townhouse market analysis. We cover these zip codes, as always, for the past 2 decades. We cover these property types. You can download the slides so we don't have to go over that now. Townhouse sales, I'm going to turn this over to Gareth John, who does all the numbers at the firm. Okay. Gareth?
Thank you. Thank you, Rob. Welcome, everyone. Okay, let's just jump straight in. Let's compare townhouse sales in 2022 to data from the previous 4 years. So we've got 5 years worth of data here. Compared to 2021, in 2022, we saw 82 fair market value townhouse sales in Upper Manhattan compared to 100 in 2021, which was a real banner year. Sales volume was $178.5 million in 2022 compared to $229 million in 2021. So how does that, 2021 was a banner year, 2022 interest rates went up and the market slid. If we look at 2018 and 2019, both of those saw about 90 sales. 2020, COVID, we saw 61 sales. So the norm is roughly 90-ish sales per year. 2022 was a little bit below that, but we'll get into that in more depth. Okay, let's do that right now. You can see that in 2019, right here, similar to 2019 here, similar to 2018, 88 and 90 sales. Quarters 2 to 4, 2020, we saw only 38 sales, which was about 40% down on the previous 2 years. 2021, we saw the rebound right here, 100 sales. And then the first quarter of 2022 looked pretty good, but then interest rates went up and the market has slid. Okay. These are kind of short-term economic and public health fluctuations, but the underlying market, as we can see from average prices right here, 2018 through 2022, hasn't really changed. So the underlying market is healthy, but economic fluctuations affect the number of sales, but not the price. Okay, let's look at sales by class, 1 and 2 family versus rental investment 3+ family versus SRO renovation investment. 2021, we saw 42% of sales. This is percentage of sales. It isn't number, so we can compare apples with apples. 42% of sales were residential in 2021. That dropped to 34% in 2022. Rental investment also dropped, but not by as much, and SROs went up. Can we look into what underlies these changes? 2021 was an economically good year. 2022, not quite as good. Not terrible, but not as good. So I'm going to kind of jump into some math. Bear with me. Okay, here I've plotted the number of sales versus the percentage that are residential, 1 and 2 family. We've got 2018, 19 and 21 up here, more sales and a higher percentage of residential sales. In contrast, 2020 and 2022, fewer sales and a lower percentage of residential sales.
Can I ask a question?
Sure.
We're considering residential 1 and 2 family homes.
Right.
If it's 3 and up.
That's that. Yeah. Rental investments. When residential goes down in 2020, rental investment went up. When they went down in 2022, right. SROs went up. So the pattern for rentals and SROs is not. I think that's independent. 2020 rental investments went up because I think there were new laws in place that increased the attractiveness of rental investments townhouses to investors.
Correct.
Okay, so it looks as though from this, based on only 5 years data, if we had 30 years data, it would be better. In years of high sales, a higher proportion are residential, 1 and 2 family. And I think the theory is that that's because 1 and 2, this is price per square foot based on the 3 different types, residential, rental investment, SROs. From 2022, price per square foot is highest for residential sales. So that means that boutique residential sales are a larger investment than the other 2 types. As such, they're probably a bit more sensitive to market forces. Okay, so the previous slides have analysed market history. Let's jump right into where the market is right now. Okay, so that's where the market has been, and now we're going to jump into where it is right now. We're going to look at listings, we're going to look at discounts, and we're going to look at the in-contract listings. Okay, townhouse inventory was stable at around 70 to 78 throughout 2021, dropped to 58 in the winter of 2021, then rebounded in 2022, but overshot. So inventory is here. This is townhouse discounts, the percentage of properties showing discounts. And this is the number of properties in contract on the right. Okay, so the townhouse inventory was 70 to 78 throughout 2021, dropped during the winter to 58, and then came back as it should have done in the spring, but overshot, rebounded to 117 properties, which is much higher than we normally see. We can attribute that to economic uncertainty and especially to the interest rate hikes that occurred throughout the second half of 2022. So inventory overshot, and in the face of competition, sellers, this is percentage of listings offering discounts. Sellers an increased number of sellers or percentage of sellers offered discounts in order to encourage trade.
I would say that one has more to do with the interest rate hikes.
Right.
Number 2.
Right. And then even though discounts went up, the number of properties going into contract dropped all the way down to 5 in December 2022.
That was a record low.
That was a record low.
If you look at our monthly reports, that's a record low. It kept going down.
But the good news is inventory's come back down to where it should be, and in-contract listings are starting to return. We're also seeing interest, Rob, aren't we?
It's starting to taper off. So
right.
the outlook is coming. Stand by. One more minute.
Okay, the market. So in terms of where the market is, what's selling, what's on the market, just like the residential 1 and 2 family, the boutique end of the market is being affected by economic uncertainty. This is also seen in terms of pricing of listings. Here we've got properties less than 2 million, 2 to 3, 3 to 4, and over 4. The listings on the market, of the 78 on the market, 51, that's 65%, are priced below 3 million. So it's the lower half of the market. The townhouses in contract, currently we have 9, all of them are below 3 million. And of the 82 sales during 2022, 88% sold below 3 million. So the lower end of the market is dominating, and the boutique end of the market is currently down. Okay, so to summarize, the upper Manhattan townhouse market was stable 2018 through early 2020, was hit by COVID in terms of number of sales but not price. Recovered and rebounded in 2021, but now faces a new challenge in terms of economic uncertainty. The market's driven by sales under $3 million. 1 and 2 family properties seem to be more susceptible to market forces. Discounts are high, and investors are starting to see opportunities. So we're starting to see something of a trend towards recovery. Very slow. As you can see, we analyze the market carefully, and we track and predict the patterns.
Okay, part 2 is exciting, the condominium market. Now, Gareth is sitting down because he's been doing a lot of extra research. This is exciting stuff. All right, so these graphs are more friendly. I'll let Gareth go over the graphs that you created, and I'll take a break.
Okay, thank you, Rob. Okay, so we've decided this year to highlight the research that we do on the condo market. It's a completely different market to the other townhouses. So let's just jump straight in. Let's look at. Let's start with condo inventory, and you can see that condo listings recovered. This is listings January 2020 through November 2022. That's the most recent data. Following COVID, inventory recovered. And it's slowly tapering down a little bit, but
that's because they're all selling.
That's right. So the inventory has remained high, and that has driven a very active market, although it's just starting to kind of cool off a little bit now. So compared to 2021, in 2022 we saw 522 fair market value sales. I think that's an enormous number, versus 395 in 2021, which was a good year. Yeah. 2018 and 2019, we saw 256 and 293 sales. That's about ballpark. 2020, the market dropped, but rebounded in 2021, and then just went skyrocketed in 2022.
I got a question. 2022, we saw 522.
Right.
That had to be in the beginning of the year, didn't it?
It was, absolutely. Right. And it was mainly due to some very effective condo sellouts.
Gotcha.
Especially in you can see that here. 2019 drops away in this is number of condominium sales. 2019 steady, drops away. 2020, the middle of the year, recovers faster than the townhouse market because it's a higher volume, lower price per sale. 2021 was good, and then look at this. 2022 quarter one, quarter two. That is a huge sellout, and
two sellouts.
Actually, several sellouts.
Nice
but
job,
we're going to look at them in more depth. So the market's kind of dropped away a little bit, but let's look into exactly what happened.
We know these developers.
All right, we do. If we look at average price, stays pretty steady. The sellouts have pushed the price up just a little bit. Sales by class. Just as with townhouses, there are several different classes of condominiums. 85% of the market in 2022 and most years is the R4s. Those are the sales in the large elevator buildings. And where did the sales take place? Well, in 2020 and 2021, just like most years, that unlike the townhouse market, which is concentrated in the middle of Upper Manhattan, condos, the further south you go, until recently, the more sales there have been. So,
and these zip codes you see, 29 and 26, are the east and the west, all the way south.
So I should say this is 2020, 2021, 2022. The zip codes of Upper Manhattan from south to north, south to north, south to north.
And Gareth, if you guys are going to look at our quarter, I think it was quarter three last year, what did we say when we talked about 2.6 being where all the condos were being sold?
Right.
What did we say would happen?
It would move north,
and
it absolutely did. It's moved into 10027. That's central Harlem. Okay, and what was selling? Was it the older boutique pre-war condos, or was it the brand new, shiny new large building condo developments? And it was the latter. Here we can see that almost half of sales were in buildings built since 2010, and most of those were built since 2018. Okay, and this is cool. It's
I call this a heat chart. This is over my head. So if it's over your head, think of it as a heat chart.
Okay, this is every single condo sale in Upper Manhattan in 2022 by zip code, south to north, and by construction date, not by decade, but by actual year. You can see that the new construction was concentrated. The sales of newly constructed condos was concentrated in Central and South Harlem. Okay, so to summarize, the Upper Manhattan condo market was stable in 2018 and 2019, recovered from COVID in 2021, then was very, very, very strong in 2022, especially through quarters 1 and 2. Activity was driven by new boutique developments in Harlem, which also resulted in an overall price increase. We're analysing the upcoming developments. We know that there are at least 33.
That's right.
10 are under construction. 22 are pre-construction. We know where they are, and we know when they're going to be for sale. If you want more information, get in touch.
Get in touch with us. You know how. So my outlook on the market, based on Gareth's data, is more of a gut feel. So I don't write down notes on this, and I'm not going to talk about charts. I'm just going to go with what you just saw and what is happening in our office today, literally. So in December, I didn't give you an outlook. I wanted to wait for all this data to come in. And what I noticed today, we'll talk about townhouses and then condominiums. Townhouses, 82 sold this year and 100 last year. And last year was a stellar year. And this is supposedly a bad year. It should be a bigger spread, wouldn't you think? The reason it wasn't a bigger spread is because all of those are, 80% of the ones that sold went into contract at the beginning of the year, spilled over in the second quarter a bit. If you look at what the information that Gareth gave you, nothing really went into contract at the end of the year. So the pure numbers don't give you everything.
Right. I agree.
We went through a rough time the last 2 quarters, but the yearly numbers don't show that. What I can tell you now is since January 1st, literally, the phones are ringing, the investors are back, and they're picking up the properties that have been discounted due to the high interest rates, and they're grabbing all the good stuff. So if you do want to buy a townhouse, I would say now is the time to make offers on the cream of the crop before they get taken away, and then everyone else gets comfortable and comes back to the market. The truth is, interest rates are tapering off, buyers are getting used to these higher rates, and the prime properties are out there right now. Remember, we took off 50 or 60, or the brokers and sellers took 50 or 60 properties off the market in the fall, literally within a 2-month period. They're coming back. When they hit the market, be ready, be pre-approved, call us, and go grab the beautiful property that you would normally not be able to get your hands on, because they were pulled off the market. They're going to come back, and you're going to grab them first. Yeah, go at a higher interest rate. Refinance in 3 years when they come back down, if they come back down. But this is the market now. The interest rates are where they're not going back down immediately, but they've tapered off. Grab the best property you can when they hit the market in March 15th to April 15th. Would you agree with that?
Absolutely. Yep.
All right.
Yep.
So,
It's a great time to get a great value property for an excellent price.
right. So townhouse market, if you want to buy, get in there. If you're a seller and you took yours off the market, it's going to get purchased in the spring if it's a quality property. If it's not, call Best Star at HPRED and have your property spruced up a bit, because the competition is going to be fierce this spring.
It is.
All right, let's talk about condominiums. All right, so the part 2 of our outlook is condominiums.
Right.
We put a little more energy into that. Thanks, Gareth. So the condominium market, we talked about how the inventory went down. They were selling. We talked about the number of sales went way up, not like townhouses where they went down but the prices stayed the same. The sales number went way up, but the prices also went way up. Inventory came down because of so many sales. So the condo market is really good in Harlem and hasn't really been affected so much. I guess the price point is cheaper, so the interest rates don't have as much of an effect on a $3 million purchase.
Yes, Rob. Yeah.
So with condominiums, rentals are at 30% higher than they were 18 months ago. So if you bought a condominium, you've appreciated in value. You may have a slightly higher interest rate, but you haven't paid rent at a 30% higher rate than you did 18 months ago. Anyone who bought a condo in the last 5 years in Harlem, good for you. Congratulations. The information that Gareth gave you earlier, the 10 new properties, 10 new condo developments that are going to be selling out this year, and then another 25 behind that.
22. Yeah.
22 behind
22.
that for the following year. We have all of that information. So right now, if there's 335, I think, on the market, you've got 335 plus roughly another 100 and 150 that are hitting the market this year. If you're going to buy a condo, call us or call a broker that really understands condos. I'm a licensed contractor, and I've developed condominiums and written condo plans, so just saying. Find someone who does that and go grab the cream of the crop as they hit the market. Know what's coming to the market, not just the 335 on the market, but know what's coming out this year and what's coming out in 2024.
Yep.
That's my outlook on the condo market. If you're renting, please consider buying a condominium in Harlem. it's a really solid investment.
It is, absolutely.
All right, thank you so much. Thank
Yes.
you, Gareth, for all the research your team did.
Oh, it's a pleasure. It's a pleasure to keep up with the market so that we can predict the future, Rob. It
Awesome.
really is.
Well, it really is helpful, and it gives us a clearer picture on what we saw and can help you predict the future, like I said. So if you want to ask any questions, please do on the YouTube link below. If you want the slides, click on the link below. If you want our report, go to the resource tab on our website and download it this year, or a bunch of you get it in the mail automatically. Thank you for watching this video. I'll see you next month in our monthly update, and we'll see you next quarter for the next quarterly update.
We will.
Have a
Thank
good
you.
2023.